Airbnb reported earnings last week, and there was a great reaction from the market. Shares popped after results came out. What was interesting is that I didn't think there was a lot that was very surprising about the results. Double-digit revenue growth. That's about what we expect from Airbnb. Solid free cash flow company. But this really just reverses what happened last summer when the company had guidance that was a little bit weaker than expected and shares just absolutely plummeted. So now we have results and guidance that may be a little bit better than expected. It doesn't fundamentally change how I think about the company, but it does show just how volatile the market's reactions and opinions can be about Airbnb specifically. So I want to dig through the results and tell what is important and what I'm looking for in the future. This is a company I think has a solid foundation, great cash flow business, but the real upside for Airbnb is getting into new businesses, adjacent businesses. Becoming that travel concierge is something that they talked about, or expanding beyond the core. Are they going to be able to do that in 2025? That's what management is saying, and we will find out more in May. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's start by going over the high-level numbers. These are the high-level numbers that we want to look at. Revenue up 12% from a year ago to $2.5 billion. For the full year, $11.1 billion in revenue. So Airbnb is still relatively expensive, $100 billion market cap as I'm recording today. So that price to, or enterprise value to sales multiple when you pull out their cash is still a little over 8. Just something to keep in mind from a valuation perspective, but very solidly profitable, $461 million in net income in the most recent quarter, $2.6 billion for 2024. This net income number is going to be a little bit volatile based on things like insurance. A couple of years ago, there was a tax charge in Italy, I think it was. So you do want to look at this over time. I'll show some of these charts in just a second. Adjusted EBITDA. The thing you want to look at here is their margin, 31% adjusted EBITDA margin, and 36% for the year, up 11%. And free cash flow, this is what's great about Airbnb's business, $458 million in free cash flow, and a 40% cash flow margin for the year, $4.5 billion. They also give gross booking volume. Airbnb doesn't record revenue for every dollar that is spent on the platform. They only record revenue on what they actually take from each stay. So the booking volume is going to be a better proxy for how much volume is or money is actually being spent on Airbnb. That was $17.6 billion, up 13%, 15% excluding foreign currency exchange in the fourth quarter, and up 12% on both of those metrics in 2024. So again, this is a company that's growing at low double digits. It's not going to be a 20, 25, 30% growth company, but it is growing nicely, taking market share from hotels. And if they can expand the business beyond what we see today, again, can be a really nice winner for investors long term. Nights booked 111 million and almost 500 million in the full year. I'll get to their cash in just a second, but I do want to highlight that they have been repurchasing stock at a pretty rapid rate, $838 million in repurchases just in the fourth quarter. And for the full year, $3.4 billion worth of purchases they added to their authorization. So that authorization is now $3.3 billion as of the end of 2024. Just another nice addition to the value add that they get. The other thing that they're doing is keeping a lot of cash on the balance sheet. So let's look at that cash. There are two kinds of cash or assets that Airbnb has. The first is these first two lines, $6.9 billion and $3.7 billion of cash and short-term investments. So this is going to be things like money sitting in savings accounts or money that's invested in short-term treasuries. Those are the kind of short-term assets that you have here. The other thing is funds receivable and amount held on behalf of customers. So this is customer funds. When you book an Airbnb, even a year from now, you're going to pay for it right now. And that money sits on Airbnb's balance sheet until it's released to the host. That's not until your stay actually begins. So you add all of this up and Airbnb gets to collect interest on all of this cash. You go up here to their full year 2024, $818 million in interest income. So this is just another benefit of their business model. They have interest income, which is a pretty significant portion of their total net income. And that's just coming from interest on the cash that's sitting there on their balance sheet. So they could keep accumulating this cash or they could keep deploying it into buybacks. Obviously, management thinks that the appropriate thing to do is buy back more stock. But either way, I think it's a win for shareholders. At a lower price, it's actually going to be much more attractive to buy back stock. So we'll see what they do after this recent bounce in the stock, I would argue that shares aren't necessarily super cheap, trading for about 22 times free cash flow on a trailing basis. And then based on analyst estimates for 2025, about 22.5 times free cash flow. Let's look at the outlook.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
This is where things were a little bit tepid. This starts right here. Q1 2025, they expect to deliver revenue in the range of $2.23 to $2.27 billion. That's 4 to 6% growth or 7 to 9% growth, excluding foreign currency impact. They talked a little bit about this on the conference call, just generally a little bit weaker quarter, but they don't expect that to be something that's going to continue throughout the year. You have things like timing of Easter and leap day. So without those and excluding foreign currency, growth would be about 10 to 12%. So that's about what we should expect to see from Airbnb. For the full year, a big piece of their discussion on the conference call was their plan to invest $200 to $250 million in launching and scaling new businesses that will be introduced later this year. A lot of that is going to come out in May at their spring event. So that's going to be something to keep an eye on. But that 200 to 250 million is going to largely be spent on building supply, so attracting supply to the platform, and then also marketing, so trying to attract customers. This is the growth opportunity, and this is where Airbnb has the potential to be a growth stock once again, just beyond kind of low double digit, high single digit growth that we've seen from the platform over the past year or so. Can it get into new businesses and open up new opportunities? That will probably be determined later this year. What's really going to be important for Airbnb is what these next new product and line extensions are and how they impact the business. Management has talked about, Brian Chesky specifically, has talked about the fact that they could add multiple billion-dollar businesses each year over the next few years. So is that going to be experiences? Is it going to be things like grocery delivery or having your fridge stocked when you show up at an Airbnb? Those are the kinds of things that I think are really natural. Reservations to restaurants, basically filling out that travel experience. But they also talked about wanting to use the app more. Most people use the Airbnb a couple of times a year. They want it to be something that's used a couple of times a week. So does that mean moving into the reservation market? That's an interesting potential place for them to move because that is a very, very bifurcated market. So could they bring hundreds of millions of users into reservations and actually pull all that supply onto Airbnb? We'll see exactly what they're going to do. Like I said, May is really when they talked about introducing some of these new features, and then expect more of those features to be announced each year over the next few years. I think they really want to expand the number of verticals as they say that they're offering products. But that's the upside. The core business doing extremely well. I don't see anything that's going to threaten that. Not the cheapest stock if you just have that core business, but the upside is really in expanding into new products. That's why I still remain long shares of Airbnb. But let me know what you think about the quarter and what the future for the company looks like. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.